All right, hello everyone. I'm going to review the M1 Finance portfolio today, and it looks like the portfolio is up 60%, so it's doing very well during these times. And I'm going to quickly talk about the changes in the portfolio. So, if you quickly look at the bottom, there has been one significant change. And in the previous video, I did have one company. You guys know what that company was? It was AT&T, and I want to quickly talk about why I made the switch out from AT&T into the company STOR. So that would be ticker symbol STOR. STOR capital IY. I'm going to talk about why I made those changes. So we can take a look at the current value, total gains, and total return. You guys can take a look at the stats there. The portfolio is doing very well since I started it back in February 15, 2018. And let's quickly talk about why I made those changes for AT&T. So looking back at AT&T, when I bought the company, I thought that the company was massively oversold. It was trending around that $29 range, and I think the P ratio may have been 15 or so. But I was looking at the company, and the metrics to me, I thought that the company was generally oversold, so I definitely wanted to snag up some shares. And I said in the previous video that I did not care if AT&T reached 10,000 shares, whatever I had to do to just put more money into that company. That's what I was going to do. So the thing with AT&T is that they recently announced that they were going to get rid. They recently announced a debt repayment program or something like that. So they were going to try to, a debt payment program. So they're going to try to pay off the debt. They're going to try to pay off their massive debt load that they've been, having to just deal with throughout these last couple of years. And one of the problems with AT&T is that they were, according to reports, trying to sell DirecTV. So they were trying to sell off DirecTV due to just the nature of the business. The business model has really favored streaming in these times, and I would say that cable has kind of completely fallen out of favor as far as like the consumer base in this sector. So streaming has been a lot more popular, more than just buying cable. And AT&T is trying to sell out. So they overpaid for the cable business, DirecTV, and now they're trying to sell it out. So, for instance, let's say if AT&T bought DirecTV, and this is not true, but let's say if they bought it for $80 million. They're now trying to sell it for $20 million again, and it's not true, but I'm just trying to let you guys understand the differences between, overpaying for something and then having to basically get out of the position because they have so much debt load that they're trying to cover. So that's the reason why that AT&T has been doing these changes. And I kind of felt that AT&T was going to be sort of not moving at all during these times, because I think a lot of investors are kind of just waiting around to see if anybody's going to pick up that purchase. And I don't see it. I don't see it happening anytime soon. And there's been a lot of criticism with AT&T as far as management is concerned. Some people said that they mishandled. They're mishandling the streaming business. They're not one of the popular choices when it comes to streaming, and I guess they were kind of late to the game as far as buying the stream, but getting into streaming and what have you. So when we think about streaming, we think about Amazon, we think about Disney. So there's been a lot of criticism about their management, and so I reevaluating the company, even at a 15 PE ratio, I definitely think that AT&T is going to have some heavy resistance at the $30 mark now that they have announced that they're trying to sell DirecTV, and until they do, I think that $30 is going to be the resistance. So if you look at the purchasing of when I actually purchased the stock, I purchased at $29. So I believe that AT&T has a little bit more further to drop when I'm looking at the technicals behind, when I'm looking at the charts, when I'm looking at when I'm doing my due diligence, I just feel that AT&T has a little bit more of the fall until they sell DirecTV, and once they take care of all the debt that they have, I do believe that the stock will trend way above $30. It'll probably get back to that $40 mark. But I traded them out. I traded them out for STOR Capital, and STOR Capital recently had announced that they had a dividend increase today. So I purchased it. I purchased 146 shares for an average, for an average price of $27.26. So as long as the company remains under $30, I will just continue to buy it. I will continue to buy. They had a recent dividend hike announcement today, which contributed to the stock going up 3%. And it's a good company. It's a good real estate company. They hold a lot of key important real estate. Yeah, I was looking at their portfolio over there. Probably not quite as good as Realty Income, but I think Realty Income and STOR, they're right up there as far as like what they hold, and as far as their properties is concerned. So I was definitely interested in putting some money into STOR because not only that, but they do have very, very solid management, probably on par with ticker symbol O. And even though I'm sacrificing a little bit of dividend yield just to purchase some shares of the company, I would rather do that and enjoy the capital appreciation with the dividend. So I just believe that looking at the evaluating both companies, AT&T and STOR Capital, they are completely in different sectors. But the problem with the thing that I was saying is that at least the thing that made sense to me, STOR Capital was not only significantly cheaper. Well, not significantly cheaper. STOR Capital is cheaper. They have better management within their sector, and they're one of the better real estate companies to purchase, especially at this time when they are below $30. So I do believe that this will pay around a $50 dividend, and they did have a dividend increase today. So I have to crunch the numbers and see what it actually is. But that's going to be it for the portfolio. So now we're sitting at $4,319, and that's really good to see that I'm focusing on this portfolio, because at one point it was pretty much neglected. I pretty much neglected to. I don't know if you guys can see it. They might have to switch the screen there, but let me get out of this little chart. But yeah, I pretty much neglected this portfolio, and I wasn't putting any money in it. So let's take a look. I just want to look at the transfers. I do have a $200 monthly setup for the first of each and every month. I have a $200 setup, and let's say move money. I want to see something here. No, okay, history. Okay, so no. I've been depositing money. What I'm trying to do is I'm trying to see like how much you can put into the Roth IRA. I think mine was about 6,000, but I haven't really. I can't really find it here. I don't know where it's at. Maybe it's funding history. Let's take a look at that. Okay, so that's what I really wanted to talk about. So you can see in 2018, I contributed $1,500. In 2019, I only contributed $100 to the Roth IRA. So this was massively on the low end as far as my projects is concerned. You guys know I've been focusing on the Robinhood portfolio so much, and looking at the Robinhood portfolio, I might talk about this in another Robinhood portfolio video, but I'm considering switching Robinhood out for a better trading app. So the trading app I'm looking at is Charles Schwab. So let me know what you guys think about Charles Schwab, switching them out for Robinhood, because I just feel like Robinhood it gets criticized a lot for like a lot of junior investors, a lot of amateur investors getting into the market and getting their toes wet and just buying some companies. But even then, that's not the reason why I want to make the switch. I want to make the switch because I just want a better trading app. And a lot of times in the morning when I'm trying to do my trading on Robinhood, I can't, because the markets are so volatile and there's a lot of trading going on. And pretty much the Robinhood app just freezes. It freezes out. So, I quickly want to take a look. So in 2020, I've contributed $2,000. So I am looking forward to getting that up to the $6,000 mark. And again, I do want to focus on this because it is very important to me. And this is my Roth IRA. This is my retirement. This is basically my emergency fund. So, it's better to contribute to it now and get a good company like STOR Capital. I'm already up $327 with the company, so that is exciting news to see. And going back to what I was talking about in Robinhood, let's take a look. Hold on, let me just exit out of this, and So seeking alpha. I kind of want to see where AT&T is. I'm sorry, guys. Just give me a second here. So, oh, this is my watch list. Many people probably are asking, how come I don't have a watch list? Well, this is it. You guys can see what I look at pretty much on a daily basis and see what's oversold, looking at companies, looking at opinions, getting second opinions, this and that, yada yada. So AT&T is currently sitting at $29.12. So they've actually gone down from when I bought it. When I bought it, it was at $29.50. They have gone down, and I actually think the company got down to 28. So AT&T, like I said, I do believe that $30 is the new resistance point until AT&T can find a buyer for DirecTV, and until they do that, I think it's just going to be trending around there. And STOR Capital, I bought it at 27. It's already at $29. So I'm still getting a 5% dividend yield, and that appears to be a good switch. But to end off the video, I just want to quickly talk about Charles Schwab, and I looked at the some YouTube videos about the Charles Schwab app. I'm very, very it's very impressive to me. I definitely like this app. This app has a lot of things going for it. I never heard anything about Charles Schwab actually dropping and having glitches, and they're very, very good brokerage. So I definitely considering them moving forward, and I just may possibly exit out of Robinhood and go to Charles Schwab. That's what I'm considering right now. I haven't done it yet, but that's what I'm considering. But anyway, guys, that's going to be it for the video. I'm very happy with the switch. AT&T, again, like I said, it's all due diligence. It can very well go back up to $35 or $40, but I just believe that with all the debt that they've been having, and with the company problems and the mismanagement, I think that it's going to be hovering around that $29 point for some time. So I hope you guys have a great trading day, and I'll see you guys next time.